Inflation is at an all-time high. The value of the pound versus the dollar has plunged to a 30-year low, and the Bank of England buying up government bonds sets off global alarm bell. British economy is not in the best shape right now. In today's video, we will look at the crisis the British economy is facing. Is this going to be the start of an economic meltdown? It was an odd manner to usher in a new monarchy and a new government. The immediate causes of the numerous crises that are currently plaguing the UK date back years to the financial crisis of 2008 to 2009, the depreciation of the pound sterling, austerity budgets, Brexit, the pandemic, and Boris Johnson's downfall. The new government, led by Prime Minister Liz Truss, decided to provide a massive debt-funded tax cuts, sent the pound plunging to a record low, just a few pennies above parity with dollar, and pushed prices of supposedly risk-free bonds into a freefall. The UK government has subsequently come under some very scathing criticism. Former US Treasury Secretary Larry Summers criticized the trustees' economic policies as being totally irresponsible. Even the International Monetary Fund, or IMF, which spends most of its time working with developing market economies like Pakistan and Sri Lanka, warned that the trustees' policy would stoke up inflation and increase inequality. The UK's fortunes have been declining in fits and turns for 15 years, as shown by the value of pound. By the end of 2007, a pound was worth more than $2. Currently, strategists expect that it will shortly drop below parity. The financial crisis was particularly hard on Britain, and its sizable banking sector was the beginning of its decline. The nation's productivity growth rate dropped from one of the highest among advanced nations to one of the lowest almost immediately, which was a significant underpinning of the overall economic boom. In 2008, the pound dropped 26% to roughly $1.50. The pandemic struck further down the economy. The pound reached a high of $1.42 and a low of $1.15 between 2017 and 2021. Recently, the pound hit a record low of $1.03. As of October 5th, 2022, a pound was worth $1.14. Even if tax cuts are successful in raising supply, the benefit won't be seen for some time, whereas their immediate impact is to raise demand. The tax cuts also follow Prime Minister Liz Truss's proposal to freeze energy costs for homes and companies this winter, adding more fiscal stimulus. And this is where the real problem lies. The recent moves by the government threaten to worsen an already fragile fiscal and macroeconomic situation. Contradictory forces have been unleashed, making uncertainties greater. The government plans a strongly inflationary program, but hasn't said how it would be funded. Meanwhile, to deal with inflation, the Bank of England will have to raise interest rates, a contractionary policy that might crash a housing market ultra-sensitive to mortgage rates and send the rest of the economy spiraling down. This is not a pretty picture. The government could backtrack on tax cuts, but that might be political suicide for Truss, after having campaigned for the Prime Minister's job on promises to ditch economic orthodoxy and seek radical solutions. Despite being scolded by everyone from the International Monetary Fund to former US Treasury Secretary, Truss will hold fast. She insists that she's making difficult decisions to strengthen growth. The least likely scenario is a currency intervention to prop up the pound. However, UK not only lacks the reserves to get far with such an effort, but also the experience of being forced to withdraw from the European exchange rate mechanism in 1992, the last time the government tried to boost the currency with purchases. That was the notorious Black Wednesday when currency traders, including George Soros, made billions by shorting sterling at the government's expense. Ironically, getting booted from the European exchange rate mechanism ultimately helped the UK economy, which went on to experience 16 years of economic expansion that ended only in 2008. According to Campbell Leith, a professor of macroeconomics at the University of Glasgow, only one of two outcomes is possible. One, the government convinces markets that Truss's policy are sustainable. While she's politically unable to backtrack, she might opt to raise other taxes to cover shortfalls and reduce the need for more borrowing. 2. The Bank of England allows inflation to run hot, sacrificing its independence. But if the Bank of England helps out by softening monetary policy, then that's going to be painful. As previously posted in this channel, if you have not seen yet, please check out videos on financial crisis in China, Sri Lanka, Pakistan, Russia, and now the United Kingdom. The world economy appears to become more fragile. In the end, nobody really knows what will happen in the upcoming weeks and months, but a full-blown financial collapse in the UK still seems quite improbable. The recent tax cut should provide some reliefs. A weaker pound would encourage foreign investors to buy, which would increase demand. The United Kingdom will now go through this. This is not a pretty picture. The United Kingdom had an excellent reputation, and it's in danger of losing that extremely quickly. Other nations and economies are watching. Let's hope everything will work out. If you learned something valuable, please make sure to like, subscribe, and hit the notification bell for more contents like this. You can check out more videos on the channel and share. See you in the next one.